right, a very good morning, everyone. I hope you guys are doing amazing. I hope you had a nice weekend, and I hope the Monday hasn't opened so bad as well. Yeah, it's a brand new month, and we're going in for our market snapshot or our daily analysis. And don't forget to join us every morning at 11 a.m. So that we can be able to break down the different aspects that are moving the markets, where some opportunities might lie, and what pairs would be looking at. So nonetheless, sorry for the late start to today's session. So at the moment, feel free to share the link with your peers, your communities. If you're on X, feel free to repost the live as well, in case you have a trading community or friends that you trade with that might find this analysis helpful or supplementary to their daily trading activities. But most importantly, don't forget to do your due diligence and, of course, manage risks accordingly. Other than that, I would like to thank everyone that I was able to attend our last month's webinar. Actually, though it was last week, and hopefully you're able to pick a leaf here or two. A lot was shared, and I believe it was able to impact you guys positively. On the other note, I would like to remind you that don't forget to sign up for the different FXPesa classes that we do have all around East Africa, Uganda, and Tanzania. We do have physical classes that you can be able to sign up for and make your way to our different academies in Tanzania, FNB House, and in Uganda, Rumi Building, Lumumba Avenue. At the same time, if you're anywhere else, you can be able to join in the Zoom classes. We have an advanced class every morning at 10 a.m. and then we have a beginner class every evening at 8 p.m. So in case you know a person who is most definitely interested in those classes, you can as well go ahead and recommend them to use the link in bio right below. So other than that, we can now get down and look at what market movers you can expect this coming week. I'm going to start to the fundamentals as well. Just a second as I come in and share my screen. All right, so looking at what we're having on our calendar, today is Monday, 2nd February. And as you can look, when we have one red folder, which is the ISM manufacturing PMI, and then the ISM manufacturing prices that will be coming in at exactly 4 p.m., which will be the New York Open time. So we can expect some volatility within that. We expect a higher forecast. Based on our forecast, we expect a higher ISM manufacturing PMI, which means the economy is starting to steadily grow or to move higher, right? This index basically tracks the growth of an economy based on the manufacturers or how much the manufacturers are spending in terms of paying their employees, raw materials, and things like that. So the more they are purchasing more or spending more money when it comes to production units, that means an economy is growing because they are producing more. So usually when you look at it raising towards the 50 mark, it means an economy is growing. When you see it going above the 50 to the 52.5, it means the economy is growing at a much faster rate. Usually above 52.5, we expect inflation to come in, but we have been pretty much below 50, and we're coming low at 47.5 almost. So we saw previously 47.9, which showed a slow economic growth, which was bad for the dollars. Remember that coming out of December, we had a slow economy in the US, and these are some of the figures that were showing us what was going on, and you saw the weak dollar going in. So right now we are seeing a possible recovery with this ISM manufacturing PMI. That will definitely signal a growing economy coming in from the USA, right? So on the other hand, don't forget, in case you have any queries trading related, you can always drop them in the comment section. Then we can go through them. You have some pairs you really like us to look out for, to look for some opportunities. We can be able to look at them as well. Or in case you have anything you'd like to put across trading related, you can as well drop it in the comment section and we'll get into it. Moving on, trading economics. As we all know, gold has really been on a crazy run last week, especially on the leaked news on the possible next Fed chair or maybe Wash, who will of course be expected to push for lower rates based on Trump's liking as well. So last week we had a historic drop on gold, as you can see, and today, as you can see in our description or our headline, gold extends its historic drop extends that decline after a historic drop. Gold slipped more than 66%. to below 4,600 per ounce on Monday, extending losses from the previous session when the precious metal suffered its drop. So some people are thinking of this more of like a black swan effect, right? These are always abrupt events that lead to a market crash. We wouldn't count the gold crash more of a black swan personally because it hasn't led to a major global crash, right? Not the morning when you look carefully, which shows that even the equity markets are actually tanking. You know, when you come to the index over here, you can see equity markets are actually also tanking, which if this becomes very aggressive, then it can qualify to happen. It can qualify to be a black swan. So from this article here, as I was telling you, it was basically mainly outsparked reports that the US President Donald Trump plans to nominate Kevin Wash, right? Viewed as more hawkish choice to lead the Fed Reserve. Profit taking also emerged after a relentless rally that had pushed gold to record highs. That advance was fueled by strong central bank demand and the so-called debasement trade, or that trade, the Sell America trade that was going on for the past 2 weeks, or being popularized as investors rotated into fiscal assets from currencies and bonds amid concerns over surging government debt, heightened geopolitical and economic uncertainty, along with worries about the Fed's independence, reinforced gold's safe haven appeal. Momentum by buying further amplified gains with a wave of purchases from Chinese spectators adding forth to the rally. This word English word is so hard. So the word is exacerbating the crash as they took profit. So anyway, coming in from last week particularly, it was just basically around the Fed, the next Fed chair, right? The next Fed chair rumors are what caused the major drop we are seeing. Of late, we have been seeing a very great demand for gold based on the factors they have been talking about, the geopolitical tension, the fact that the Fed's independence is being questioned a lot of late. Now that basically meant that investors were losing trust in the Fed and probably turning to our safe haven currency, right? So that's basically what was happening before the gold buy. Now for the sell, it was the fact that we expected. Sorry, just a second. All right. So as I was saying, with the news of the next possible Fed chair, investors are now starting to turn on what we call a risk-on habit. That means they start doing profit taking out of gold and now running to a bit of indexes or running to currency bonds. And if you look at the gold crash, it also led to a buy up on gold, right? It led to a buy up on gold. So you can look at just a few major news events around here. Then we can see a bit of what maybe moving the market. So Kevin Wash, or the next possible Fed chair, is known as a hawkish Fed who pushes to increase interest rates, right? And as we all know, high interest rates tend to make a currency strong, right? So the fact that the investors thought of Kevin Wash being a hawkish possible Fed chair, they start removing their money from a safe haven like gold and putting in a riskier asset like the US dollar bonds, right? That's why you saw that massive drop on gold. So it's profit taking and massive sell-offs, and they're running to a dollar index usually because of the hawkish tone, and it tends to actually support the currency. All right, so I'm going to just go through a few questions as we transition to our MT5. Let's first see if there's anything around here. Students PMI shows remarkable resilience in January. Currency pairs, latest news. Okay, this is USDC. Dollar recovery amid this potential volatility. This can be a very interesting article you may want to look out for. And the pairs that this is basically focusing on is the Euro USD and the AUD USD. The recent foreign exchange dynamics have witnessed a partial recovery of the US dollar after a significant slump, thanks to expected stabilization of US economic data as the market looks toward key payroll employment figures this week. Analysts expect possible upward momentum for the dollar, particularly following the nomination of Kevin Wash. Now, of course, the confirmation of the nomination came in towards the end of the week, but there was a leak that happened from Sunday the other week coming into the new week. There was a leak that led to the initial drop on gold. Then later during the week, we got more confirmation on the possibility of Kevin Wash being the next Fed chair, right? And he's a hawkish. He's known to be a hawkish person, which means he'll be pushing to increasing interest rates. Now that basically means that dollar is supposed to gain whenever interest rates are increased, and that's what we are seeing the investors do, and where we are seeing them push the market to. So as I get my 85 charts on, I'm seeing a few questions here that you can go ahead and engage with. Being incorporation, I believe incorporation, INC stands for incorporation, says, hi morning, how do the Epstein files affect the currency? Also, can you explain how gold and silver future contracts expiration affected the price of the sell-off? So starting with the Epstein files, they have nothing to do with the currency unless Trump gets impeached. That's when they will actually affect the economy to a certain extent, but they actually have no relation completely with the financial markets. And maybe if worst case scenario, major companies, we have seen links with Bill Gates, unless people who are against the whole Epstein files start doing a massive sell-off on companies like Microsoft that are owned by some of the power in the Epstein files, that's when we can possibly see an effect on the markets. But other than that, there's no direct effect between Epstein and the markets. The markets just move based on what they pushes them. Samuel says Euro USD. Yeah, we're going to look at that in a bit. Sami Jati, hope you had a nice weekend. Let's look at Euro USD. Euro USD is on demand. That's nice. What's happening with gold? I've just explained. Now, we started off last week with a rumor of Kevin Wash being the next possible Fed chair. During the week, we got more confirmation that he's already been nominated and he might be the next possible Fed chair. And as you all know, he's a hawkish Fed chair. That means he will push to increase interest rates, which makes the dollar strong. So investors are going on to risk on. And as one of the articles we looked at, they're taking profits out of our gold and running to a more risky asset like US dollar bonds. All right, and then the USD, morning everyone. All right, so let's first go with this Euro USD gold, and then the USD have been on demand. I'm seeing Clevy with USD JPY, so let's start with those, and then we shall look at that. So I'm going to first start, of course, with the dollar index. Basically, the dollar index, because it gives us a whole perspective of where most of the markets are going. So as you can see, the previous weeks, the dollar gave us a push to the downside, leading to a breakout from this other side here. And you'd expect a correction move to happen after there's been a massive break to the downside. This on a daily time frame. Going down to the 4 hour, you can see that this correction move started off well. As of course, from Monday last week, started pushing a bit to the upside. And if you watch carefully, it's forming kind of like a series of higher highs and higher lows. So we have a high over there. Price gives us a low, gives us another high. Let me use this. Another high over there, another low, a high, a low, and then a higher high, right? So expect a push a bit to the downside in the dollar index, because right now we are seeing a reaction coming from a gap down that the dollar index has given us a few weeks back. We had this gap down that price has just come into fill, but we are looking at more of a recovery on this DXY. So we have this area here, as you can see, price has just tapped into it, and then it's pushing down. So I can hopefully see it push as low as almost this imbalance you can see here. We have some kind of imbalance that I'm trying to mark out. We have some kind of imbalance here. We can see it push and fill up this imbalance before it actually continues to the upside. I expect to see it at least get to these other levels over here, the supply levels above here, somewhere between February. I expect to correct all the way to these levels before we get that definite decision on whether it's going to continue bullish or bearish, but then I'll expect to start a recovery. Look at the figures coming out later today, which is the manufacturing PMI. The forecast looks positive, 48 point something, which means if it comes out positive, to be supporting the dollar to continue going to the upside. Now, what will determine towards the end of the week will be the non-farm payrolls. As you all know, you have the NFP coming out this week. That will give us the overall direction of where we expect the dollar to actually end up throughout February, right? From next week onwards, definitely. So this is what I'm looking at on the dollar index. So moving on to Euro USD. So Euro USD had been pushing to the downside, of course, as you all know. When the dollar is recovering, you expect it to push the downside as well. But coming in from higher time frames, being a new month, I want to do a clean top-down analysis on Euro USD. When you look at the monthly, last month's candle had a long wick to the upside, of course, and then a long wick to the downside as well, right? And then it has a body that's not as big as any other wicks, which would look more like an indecision candle. But nonetheless, when you come to the weekly, we realize that the previous week had this push to the downside, showing us dollar strength coming back in, and the market failed to close above this previous high. So what to expect this week, its rejection candle is for price to keep pushing us lower, because you have quite a big imbalance down here, and expect price to push to try and rebalance that area. When I come onto this area here, of course, the structure is still bullish until we get enough data to confirm our bearishness or the dollar strength. So I can expect it to be more of a correction move until price happens to break below this support here, or as you would like to call it, a trend line, right? Or as you like to call it, a trend line, but that's basically a slanting support level. So you can see this price taking its correction as well to push that down in the daily time frame. And if today's figures come out positively, you can see it pushes all the way to this demand level on the daily time frame. You can see it pushes all the way to this demand level on the daily time frame. So that's going to be our target area, provided the figures that come out in the New York session. Remember to be at 4 p.m. exactly at the New York Open. So they expect those figures come out positively and then push us down. Right now, what we are seeing is that at 4-hour demand level currently holding price, trying to push it a bit higher. So you'd expect it to give us some bit of this kind of push. And in the New York session, we can be able to see if the figures come out positively, that supply level will be able to push us to this demand zone in the 4-hour time frame. And that's why in the daily time frame. So it's something I want to look out for as far as Euro USD is concerned, and today's price action is particularly concerned. So I have a supply level here that I would like price to come back to. And of course, if the figures align with what is going on with the forecast, would expect to see a push to the downside on Euro USD to this demand level. Then we can look for our next trading opportunities or confirmations around this area to see if price can push us back to the upside, or if it can violate this and the trend line and the dollar can regain back track of its strength. That means we'll be going to the downside, or Euro USD will be going bearish. So that's basically what we would like to see coming in on Euro USD as well. So there's a request for USD CHF, sorry, for USD JPY. Let's just add it up from this side. USD JPY, there was NZD USD as well. Okay, so which template am I using? Okay, then USD JPY, let's get USD JPY to our watch list. All right, so let's go to NZD USD first. So I'll start this up from the weekly, and we're seeing a similar perspective to Euro USD. We had this push to the upside, price gave us a breakout. So expect a correction move based on the current dollar strength that came in towards the end of last week. If that strength continues prevailing, we can see price come all the way down to fill up a bit of some imbalances. Remember, imbalances likely act as just draws on liquidity. So price does not necessarily need to respect them, but they can be a very good magnet for price to come back towards, right? So in the daily time frame, I'm seeing the Friday candle close bearish. So I would likely expect today's candle to be bearish as well. When I come to the 1-hour time frame, you can see a bit of supply levels around here. This first one gets mitigated kind of. So you can realize that price does this, taps into the supply level here. That leaves us on the supply level above here. That's the extreme level. I would still fancy or prefer to go with this supply level here. This to have above here. For the guys that have been through some of the classes, the Zoom and the physical classes, we call this a type 2 supply level. And it usually is a high probability kind of supply level or bearish order block. So I would like to see price get into that area there. So now 1-hour time frame. I would love to see this entirely during the New York session, personally, because we shall have figures that will be coming out. And if those figures come out before we get to this area and they're negative, price could push to this area before it pushes down. But if they find a price into this zone here, and we definitely get a positive figure for the dollar, then we can definitely see it push all the way to this demand level down here. So this is basically my outlook I'm having on NZD USD. And you can see a similarity between this and the Euro USD perspective, because they are pretty much correlated, right? So this NZD USD what I'm looking at. So of course, some people will come in with I think with smart money concepts and ICT, and some will have this as a buy side liquidity resting above this trend line. Others will come up with this as an inducement level, which also makes sense. But then when I look at this, it's a 4-hour zone, it's a 4-hour supply level, and I've just basically refined it to the 1-hour time frame as well. So it's basically what I'll be looking out for, and largely waiting to see this price action as well. Alternatively, what could happen in case price didn't happen to get to that area to pick up liquidity, because you can easily see momentum coming in between the session or the London session that I just opened. We do have a support level right over here. Of course, if price happens to break below this support level, you could expect a correction from which you can be able to come up with some opportunities to look for those sells further downwards on NZD USD. That's what I would want to look out for on NZD USD. Looking at USD JPY, on the other hand, we have seen it giving us a correction move as well to the upside. Of course, in line with the dollar, it did have, I think for guys remember last week's analysis, we did have this daily demand level here that we wanted price to actually come in and consume. For the guys that did attend that last Monday's session, there were a couple of amazing pairs that wanted to look at and how price would get to them. And remember, I mentioned that price may get to this demand level before filling up the imbalance on USD JPY. And it's exactly what happened. Price came beautifully to the demand level, and then it began pushing to the upside to fill up that imbalance that we're currently rejecting. When you look at the 4-hour time frame here, you can see a clean structure that price is trying to form, and it's giving us kind of like a series of higher highs and higher lows, right? So we have a high, a low, a higher high, then a higher low, then price came as a new higher high. Now, right now, price already tapped into the imbalance, meaning it has already mitigated or filled it or consumed the liquidity that is lying between the imbalance. So what we'd expect within this area is either price will break to the downside and come back into this demand zone here. But because of the dollar strength we are seeing against the USD JPY, I would largely expect price to break above this area. This becomes more like a resistance that you're seeing over here. It becomes more like a resistance, or price will use as a support after breaking above it. So I would like to see something of this nature here, price breaking above this zone, and then definitely pushing me to the upside. We have quite an imbalance up here that you can see over here, and then we can mark that supply level as our possible target area, right? We can mark that as our possible target area. So let me come in and mark the supply level. For the guys that have still been in for our classes, you know, it's a type 1, a supply level, or a bearish order block, depending on what language you want to use in regards to those terms as well. So that's basically what I'll be looking out for in USD JPY. This on a 4-hour time frame. We can supplement this slightly with a lower time frame analysis. Let's look at 30-minute time frames. So realize in between here, all the demand levels, price tends to consume them and fill up all the imbalances, meaning it has no reason of coming around these areas until it gets to this 4-hour demand level, right? Going to the upside, once again, you can see, I think what smart ICT guys will call trendline liquidity. Another goal will be for price to come above and take out all this trendline liquidity and give us a correction move to the upside. So for guys looking for trade opportunities and you're looking at a bullish perspective, we can look at this high being taken out or being closed above. Then we can see a correction after price must close above that high, then now push us towards this resistance. Then you can now see if price has enough liquidity to break above that resistance. So in this case now, you'll be trading towards the resistance level, not basically to break it yet. This now on a more intraday perspective for guys who are looking to scalp in. But the first criteria will be price closing above that particular high right over there. If it then goes above the high, so that confirmed a breakout, you want to get a clean, nice breakout to confirm the structure or the high that price is forming, not just a sweep. All right, so that's basically what a USD JPY is looking like. We can move on a bit to gold. Right? So for the guys that were in the Tuesday class, for the guys that were in that Tuesday webinar, and you remember clearly what happened, we spoke about gold breaking above the 5100 and this level here. So I'm just cutting this half so I can say perspective I had that day there. And I mentioned that a price going to break above this level, then we can look for buys to the upside. So price did this. I think even as soon as I left that webinar there, before the night ended, price had broken above. And of course, we looked for buy opportunities throughout a number of those days there. Then when price did a retrace, it gave a nice retracement or a nice retest on this area and bought up about 2,000 pips upon that retracement. So it showed that 3,000 pips just on the same level I had marked out that day. It's the same line I used that same day. So I left it on there as well. Then later on, price picked up bearish momentum, of course, on the news of the nomination. Price breaks below and retests this same 5100 level here, pushing us to the downside. So this is just some of the recaps on what we looked at basically on the Tuesday webinar and something we're looking out in terms of where the market's headed to. So now looking at gold, I want to start from the weekly time frame because I want to show you guys a bit of a higher time frame perspective, right? So right now, gold is rejecting a higher time frame level, right, which is a weekly time frame level. Remember, I can't trade on the weekly, so you have to go down to a lower time frame to look for the areas of liquidity within this weekly demand zone here that's being given to us. So you come to the daily, you're going to realize there's a couple of areas that price had formed within the daily time frame, right? And now when you look at inside this particular zone, there is just one demand level right over here, right? And price attempted to give us a sweep below it, but then later respected this zone, pushing us to the upside. So right now you can see price give us a gap down, which on a 4 we can be able to see a bit more of clean structures. So we're still expecting a bit of a bearish momentum on gold, though as we all know, demand for gold can be driven by very many factors. Right now, Trump is highly considering the fact that he may trade Iran as well, so it can turn bullish any single time. But right now we are seeing a bit of bullish momentum from the weekly zone that we can refine to a daily zone, sorry. When I look at this push happening to the upside right now, I want this push to take me all the way to a 4-hour supply level, which is this exactly over here, right? So I'm expecting this push to take me all the way to this level here. And in terms of an intraday perspective, I'm looking for today's opportunities. I'm looking for price to push me to the supply level where I can expect to see. If I get a confirmation, I can look for some bit of bearish moves. I don't want to stay very long in gold at the moment because for those that might have noticed today, actually from around Thursday, gold has, how would I call it? The price of gold has changed in terms of value, right? So if you're having a 20 pip stop loss, right now you can't have a 20 pip stop loss trading gold. So you want to be very, very careful, right? This push to the upside right now is somewhere about 1,400 pips already, and it's just a reaction between 9, I think between 10 actually, and now it's about now 2,450 pips with only this push to the upside in a 4-hour time frame, right? So you want to be very, very careful trading gold at the moment because of that. But you're looking at the push to the upside, and you want to do some very good refinements. So when I come to the 30-minute time frame, I'm still having the same zone up here. So price has mitigated a bit of this. So I'm going to refine this down to this area here. I'll just refine to this area here. Okay, that area there is what I want to refine my goal to, and look to see if I can get a lower time frame confirmation. I'm going to be sticking more to 5-minute confirmations as far as gold is concerned because I'm not willing to take it out of risk. I would advise you also be very careful with what lot sizes you're using on gold right now. The pricing has changed. The pricing of gold has changed across all major exchanges. So that's why you're finding your 0.01. It's either giving you a lot of money or you hit a stop loss. You're seeing a very, very big loss, regardless of of how small the lot size you're using, right? Because of that value on gold. So it comes to 30-minute time frame, and just a bit some major levels. We have a breakout on the 30-minute time frame going to the downside. So you can expect this reaction to come in a bit. In case points then get to this zone, we can see the zone holding in. Let me just mark it out clearly. So we have that area there with a breakout. Then I'll want to watch this more on a 5-minute time frame and see if I start getting a shift on the 5-minute time frame. So right now I'm not ruling out any major key levels on gold. I'm going to refine the supply level to this as my best selling area upon confirmation. Very, very crucial. You want to have a confirmation. When you look at the current area, we start with some kind of support level here that price got into and gave us this 5-minute bearish candle, but you want to make sure you have a plausible confirmation. That means price breaks below these lows, created the higher high. Then you can now wait for a correction move and then look for that sell to the downside. That's if you're going to be looking for sales within the current 30-minute area that price is currently rejecting, but you want to first confirm this break to the downside. Other than that, you'll be induced into a wrong move by the market. So you want to watch out for something of this nature to happen in the market before you continue on that particular direction in gold. But then this will be my best area as well. So there's a long wick there, but I'll refine it down to a 5-minute area, which is somewhere around here, of which still I'll need to take a confirmation with it before I take any other particular trade opportunities. When I look at where price this level is, I realize I have something of about, let me see, what level do I have around this? So within this level, we have about the 4,800, a few points above it, but that's quite okay. When I look at where price currently is, it's about the 4,650, right? Now these are some key levels that gold tends to want to reject or react from and give us some areas. So it's the 4,650, this is the 4,800, which are key levels that I want some good reactions on. So price can push from this down to the 4400 before it continues up, or it can even break the 4400 and continue to the downside. Now, these are people are looking those are short-term perspective moves on gold. I don't advise holding gold for long, especially if you're buying. If you're selling, you can go with the momentum. That's highly okay, because you expect a positive figure coming out for the dollar at the end of the day, which will tend to support a bearish dollar. If that figure comes out, a bearish as forecasted. So those are some of the things you'd like to look out. Why is gold moving like a meme coin? Basically, because it's a most safe haven asset by most investors whenever they are going to risk off kind of settings. Someone teach me candlesticks, please. Are you joining our 10 a.m. class? The link's in the description. We do have day scheduled where you get to learn more about candlesticks as well. Okay. Could you see gold trade high this week? I think it's very unlikely based on the data coming out and the fact that we now get more confirmation time and time again of Kevin Wash being the next Fed chair. So it will be very, very tricky. So it will be very, very tricky to see gold from a new all-time high this week, unless otherwise the non-farm payrolls come out so badly, or Trump slaps some major tariff on a certain big economy or something of that kind. That's when we tend to see gold again gain more demand, right? And for the guys who remember, I think in the third week of January when it came back, I mentioned how China had just bought a bit of more gold reserves, and we saw this push. When it began last week, somewhere in between, Russia did sell a lot of their gold reserves, particularly to finance the war with Ukraine, which could be another leading factor as to why they are saying profit taking, right? Because they sold their gold, some of their gold reserves to finance the war with Ukraine, and that also tends to lead to sell-offs in the market. But all in all, to just a bunch of factors that led to the gold sale. In simple terms, please do US oil. Okay, I'm going to add it to the pipeline. Someone to share me on USD. On USD, okay, we're going to look at it. Just get why we are looking at USD, get why. Gold is moving like meme coins. Yes, it is. A bit CUSD, we shall add that to as well. Analysis for GU, GJ, and Euro, AUD. Okay. All right. So let's get back to the charts and look at what's happening. Okay, let's start, I think, with odd USD. Since we have looked at NZ USD and USD, Euro USD, they have similar perspectives. So odd USD will just be a walkover because it will tend to align. The only difference is that odd USD, or the Australian economy, is heavily backed by gold when it comes because they heavily mine gold. So usually when you look at other pairs when they are going bullish against the dollar, right? Odd USD took it personal. It took out almost to which levels it hasn't reached in a very, very long time, right? Because of the gold backing. Gold was on demand. The economy is heavily backed by gold. At the same time, the dollar wasn't doing well against major currencies. So that's why you look at the bull run on odd USD being very, very strong. When you look at the previous week, so you can look at this on a weekly time frame. You can look at how odd USD looks, right? Just pushing all the way to the upside. This is only just from November, actually. When it comes to the daily time frame, you can still see how clean it's pushed to the upside was, right? You can see how clean it's pushed to the upside was, just forming a clear, nice higher highs, higher lows on the daily time frame. So when you look at what's happening right now, price from the higher high, there's a bit of a demand level in between here. It's currently holding price a bit. So you can look at this trying to hold price as well. Similar to what's happening on gold, right? Similar to a bit to it. When you go to the 4-hour time frame, I want to look first for a supply level above. That will be my target area. But when I look carefully here, I realize that all the supply levels have been mitigated. So what I'm going to do, let's first refine the demand level holding price at the moment. This is a nice demand level when you come to the 4-hour time frame. Tap in, push the upside, high momentum coming in. I'm going to borrow a bit of a trend line within this. So you can see some kind of like trend line here, or a resistance level that price was tending to reject multiple times. So if price rejects this, we'll need price to reject another area of interest or a confluence, right? A whole confluence that would be a bearish area. So one thing I'm looking at is the supply level that's that will appear to be slightly above the trend line when you stretch it out, right? when you stretch it out. So this is the area I'm looking to sell within. Basically, not the trend line break. The trend line will just be a confluence. So price to break the trend line and then break this supply level here, then I can turn bullish. But if price only breaks the trend line, gets this area and gives me a bearish confirmation, I would fancy that area there to look for some more bearish opportunities. But I would expect a push to the upside as well. Then price goes lower through the day. So this is something I'll be looking out for when it comes to odd USD. Then of course I'll break below this. I'll be looking for bearish opportunities, provided the figures that come out today are actually supporting a bullish dollar, which means odd USD will have to go to the downside or to go bearish. So that's what I'll be looking out for in regards to this. So another thing we want to watch out for when it comes to these currency pairs, especially right now that gold is being tricky for everyone. Pairs like odd USD should be your personal safe havens, right? Your personal safe havens, because the peak value is manageable, the structures are a bit more clean, right? You can look at this correction move. We saw the dollar gaining last week, and guess what odd USD did? Just from lower lows and lower highs, lower lows, lower highs, lower lows, lower highs. It's all it was doing, right? So it's very hard to actually find a lot of complications with some of these currency pairs here. And of course, indices. Indices are very, very crucial for guys who you feel like for you, you're a, how do I call it? You're a hard guy. Eh? Feel like you're a hard guy, you're a commander, and you want volatility. Indices are a bit more predictable compared to gold. You can easily speculate indices. I'm talking about the likes of Nasdaq, the Euro Stocks 50. Those are indices you can actually run to in this period of time, especially now the fact that gold is a very heavy commodity. If you're going to be using a 0.01, you may need to have that 50 pips, 60, 80 pips stop loss, respectively, because of course it's going to move like 1,000 pips in 30 minutes. So why not? Apply maximum risk management and look for safe pairs to trade? NZD, USD, odd USD. You can look at pairs like Euro AUD. Actually, I like someone putting a question of Euro AUD in there. It was one of the pairs I used to trade back in 2022. I liked it so much. Yes, I used to like Euro AUD as well back in 2022. And GBP AUD. So I used to trade both of them based on which one gave me the best structure on that day there. So let's go to Euro AUD and revisit my old pair as well. So I'll add this chart. OJPY, all right, Clevy. Shall get to OJPY as well. All right, so this is our Euro AUD, and we have seen a bearish push for quite some time, right? Of course, so odd USD pushing to the upside, showing you how strong the Australian dollar was strong. How strong the Australian dollar has been, right? Because I told you, when gold demand is high, expect the odd or the Australian dollar currency itself to gain, right? Because it's heavily backed by gold. The economy is heavily backed by gold. So you can see it's actually reflects very, very well across all AUD related pairs, odd USD, Euro AUD, GP AUD, odd NZD. You'll see the same trend of the Australian dollar showing you that it's likely or it has been strong, right? So when you look at this on a weekly, price has been pushing to the downside, and right here it came back and rejected certain level here. In terms of this brand new week, it began bullish and rejected a certain level. When I come to the daily, where I've just placed that line, you're going to notice that there's a supply level on the daily time frame right around that. So in this case scenario, what I'll be looking out for is confirmations actually push me lower. It's confirmations price to push me lower, right? So that I'll be looking out for particularly. When I look at this zone, in case price breaks that zone, and when I look at the kind of structure price has formed here, the fact that price rejected this line or this area here where I've put the line a couple of times before breaking below, this is also a very strong area to sell from in case we fail to get confirmations within this area. So you're probably wondering how you're getting confirmations from the daily time frame. That's quite okay. So we drop down a little bit, top down analysis of course, and we look for what conditions shall we need to look for in order for price to actually go bearish, right? So right now we can see where price is rejecting. There was multiple rejections here, rejection, break below, correction move, push lower, right? So here what you can see, we want price to give us a total change of structure before we actually look for or place in a bearish move. So when I come and look at this push down, there is a low that price formed over here or a higher low. I will need price to break below that higher low there and then give me a correction from which I will look to push or to sell price continuously to the downside and continue with a a bearish momentum or the short-term bearish trend that Euro AUD has been providing us. I would like to continue with that. If price happens to give me the structure shift, then I can now start looking for a bit more bearish opportunities. So that's as far as Euro AUD is concerned. When you look at the 4-hour, it has a simplified but simple structure. Price tapped into the zone, you want it to come and close below, correction, push lower. Of course, if it breaks above this area, we say there's a level above this that I would still like to see price come back to this level here. It would be a nice area in case this area doesn't have enough liquidity. Remember, price looks for liquidity. So if it gets to a zone and doesn't feel like got enough liquidity, it's usually going to violate that zone and go to the next best possible area of high liquidity. That it will basically require to continue whatever direction it's actually moving in, right? So that's something we really want to watch out for, particularly. So other than that, I forgot to send my condolences to everyone that probably was on the wrong side of the market last week. It was a very abrupt move for many people like trading gold as well. So my condolences on behalf of the market for the guys that were caught offside. And I would like to encourage you guys to make sure you're always managing risks, because you've seen how crazy the markets can be, right? You've seen how crazy the markets can be. The market can come for you regardless of where you are and can do harm to you if you don't manage risks accordingly. OJPY, same push. Look at the daily time frame. We have been on a very bullish move. Of recent, we have had a lot of indecisions, right? This is a daily time frame. So one of the things I like trading, or I like trading indecisions, is I usually tend to mark the last indecision candle like this, right? So when I mark this, I usually want to see what side we close above the indecision. You see this? I would like to see what side we close above the indecision. So what I would like to do when it comes to JPY, yes, I would be bullish on the Australian dollar. So the JPY becoming a bit strong. It's why you are seeing indecision, right? These are two strong currencies through January, right? We had some bit more light on the American Japanese yen deal that made a lot of investors run to the Japanese yen as a safe haven. As a result, you saw pairs like JPY, like GPJPY, are going bearish for a while. USDPY did the same. Or JPY on the other hand, because the trend dollar was a bit kind of matching the strength of the JPY, we saw a lot of indecisions, right? But the Australian dollar is still way stronger because gold is stronger. So when I come to the 4-hour time frame, so what I would like to see basically is for price to break out of these two ranges here. It's what I would really love to see, but I'll fancy more price breaking to the upside. I wait for a correction move, and then I can look for confirmations to actually continue pushing this pair to the upside. In case price goes lower than that zone there, of course closes below that indecision candle, we can see it now start setting course for a bit more stronger yen. But you're waiting to see on that particular perspective. We need to break below this trend line as well. So coming into this, we're still looking at more. We're banking on the bullish side, or I'm banking on the bullish side for the OJPY to continue pushing to the upside. When I come into 30-minute time frame, that was a 4-hour time frame. When I come into 30-minute time frame, I think we saw this as a sweep of this week below here. Then price gave us a break to the upside, right? So what we'd like to see is to see if price can actually come and break properly below this area here. But then we're going to just take this line here. We need price to close below this particular low here, because this is the indecision range, right? So you're seeing the bearish momentum is still a bit more in simple terms. So we'd like to see more confirmation from the current supply level that price is offering us. This is our supply level. If we can get a 5-minute confirmation to the downside, I would fancy take a bit more sales. But at the moment, I don't have a confirmation till price gives me a nice structure shift to the downside. And of course, I'll be targeting the demand level right over here, because price would have given me a nice range to trade within. So what I'm looking out for right now is see if price can come and give me a break below, a correction move. Then I push to this 106.962 level there, and then I can probably see if that area will hold price for me to buy, or to continue selling without giving me a confirmation from that particular supply zone. That's as far as OJPY is concerned. So when I look at the 4-hour time frame still, just to summarize this, my preference is for price to break above either this high or this low. Then I can look for trading opportunities in regards to that, right? But actually, I'm focusing more on the bullish side. That's why I expect to see more momentum in terms of OJPY, and the possible direction is going to take within the next between today and tomorrow. and can as well take a direction for the rest of the week because we have a number of news events lined up coming through. So let's look at BTC USD. So with Bitcoin, personally, I'm looking at it going almost all the way to 69K. I'm going to just explain why in a bit. That's what I would fancy to do in simple terms, to push all the way to about 69K. And from last week, I think most of you saw that clip where Trump definitely blamed the Fed for why Bitcoin keeps plummeting to the downside. And he said that whenever he does something good for Bitcoin, the Fed comes in and spoils it all, right? So that was what he basically said. So when I look at this on a monthly time frame, really the price wasn't happening for quite a while. We had a breakout of this level here, then price came and gave us a first retest. Now on the second area here, we start price giving us kind of like pushing lower to give us a second retest around this particular zone here, right? So what I'll look for is in between this, I'm going to find a zone on a lower time frame. Let me just mark it out for you guys. So in between this, I'm going to find a lower time frame, a demand level that's unmitigated. So you can see that the first time price didn't actually get to this particular zone. When I go to the weekly time frame, I'm able to see a similar kind of candlestick pattern that I could call them double marabuzos. On the specifically two bullish candles, whereby their wicks are relatively smaller than the candlestick body, right? Usually we prefer them being high momentum candles, but usually as long as both the wicks are shorter than the body of the candlestick, they can qualify to be marabuzos or double marabuzo candlesticks, right? So we come to the daily time frame. So when I refine down here, you can see there's a small demand level that price has right around here. That's the demand level I would like to see price push towards. But in the moment we are seeing daily time frame is trying to move in bullish, right? We're at the 77 level. So what I would like to see really is going to be a push to the upside to around this 84,000 level. And then from this 84,000 level, we're able to see if we can have a confirmation for bears, or price can go right through it to the supply level above here, and then use the supply level to actually push the downside. So that's basically what I would want to look out for as far as Bitcoin. But my target is within the 69 level. That's the area where I would like to look for my best buy opportunities. So for now, I'm going to look at the possible movements price will take to get to this level here, right? So you can probably see something like that coming on Bitcoin. Of course, if price goes right above that, I would want to first stay out and look more for a bit of confluence and see if price has a possibility of going bullish or not. So you can have something of this nature here. During the select breakout of those areas, to see if price can continue pushing to the upside. If it doesn't do that, it's going to continue to the downside, respectively, hopefully achieving the 69 level, and then we can now see what price will offer us from thereafter. Okay, let's see this. Right, so we have about 5 minutes left in our session. I'm going to just look at Nasdaq a little bit. Then we can continue from there. Okay, let's look at Nasdaq. So we can see price gave us a break around this area. Failed to take out the high around this side, though that day it gave us a retest. I had a small nice retest here, breakout retest, push up a bit. Then later on it picked up momentum to go lower. We tested this same resistance that has supported has now become resistance, and then continued pushing lower into a demand level. So we look at the demand level available for us here. This is the demand level and it's a forward demand level. So you can now see if it can be able to offer us a bit of confirmations going on to lower time frames. So with lower time frames, I'm seeing price taps into the zone and then gives me a nice push to the upside. I like the candlestick closure here. I've already seen that. So I'd like to expect a correction move and then continue pushing this to the upside. In case price happens to break below that level there, I will not engage into that until price breaks nicely below that trend. Okay, let me show you guys a trend line that you can have on the daily time frame. We have some kind of like trend line on the daily time frame that we are trying to respect when you look at this carefully. So we have a trend line we are trying to respect, as you can see. So I'd like to see a break below this area. I guess it's to go a bit bearish, which I highly doubt. Though the equity markets opened on the downside today, but I expect it to pick up going through the day, especially with things like the manufacturing index coming out. I'll expect it to gain in a bit. That will be my perspective as far as Nasdaq is concerned, or the US 100. So that's what I'll be watching out for, particularly in that particular area. So this was our perspective on gold. Someone did just ask about that, but this was our perspective on gold. We're seeing a failed from a confirmation within this area. We wanted a 5-minute confirmation, and I had said to wait for price to close below that 5-minute low. And as you can see carefully, price didn't quite get to it. Just reached on this demand level and started trying to push us a bit to the upside. So I'll be waiting more for the area above here. If this one fails, give me a bearish confirmation in that particular case scenario. So that's basically what I'm looking out for. Pearl market. Talk something about cryptocurrency. In one perspective, So crypto has spoken about Bitcoin. What we want to see is what kind of forward guidance comes out of the Fed to support Bitcoin. But then basically that's all that would be there. But I can't really talk much on Bitcoin. On crypto, sorry, in general, I can talk about Bitcoin particularly because it's what I trade as a CFD. So I trade as a CFD. So basically that's it. Where the index is trading lower, there's not a domino effect from gold. It's basically, if you put the domino effect, it's basically because, how would I call it? It's basically, how would I call it? Some would like put a domino effect, but then when you look at how interest rates work, particularly, if Kevin Wash is going to be hawkish, right? That means he's going to increase interest rates, particularly. So on Thursday, we got a bit more information on his possibility of being the next Fed chair. That means he's going to push a lot for increasing interest rates. When interest rates are high, investors don't want to do what? Don't want to get loans to invest in their companies. If they won't be getting loans to invest in the companies, that means the companies will have limited growth, right? If you watch today morning's Bloomberg, they spoke about a possibility of withdrawing all of funds not being available for AI development, right? Even though Nvidia promised to later on make more investments in AI in the US, but then there was a possible withdrawal of AI capital. So I hit one of the headlines that I've been writing on Bloomberg today morning. So realize that all those factors they discourage investors from investing in these stocks until they have more certainty. So it's more of the effect, a combined effect of a possible hawkish Fed and the fact that some companies are withdrawing capital from AI investments in the US as we speak about. Remember, we are still on the Sell America movement. Last week was very popular, right? So some companies or some investors were looking to withdraw their funds, and that directly affects the index, or the indices, or the equity markets, and we see this in these index markets, right? I think when we began earlier, we saw trading economics, and all of them were red, but that's basically why. I wouldn't call it because they're not selling because gold sold. No, the gold sold for an entirely different reason, though. What they share a reason, the Kevin Wash effect, right? The idea of being hawkish. The other side, people take out profits. This side, people sell the indices, they sell the stocks of those companies because they don't think they'll have enough money to invest in some of those major industries, particularly. So that's basically how you look at it in simple terms. So it's not shouldn't really be like a domino effect. Those some will take it that way, but it's a bit more different than that. Look at the headlines pushing, or that push indices lower. GPUSD bias, you're going to have to watch because the GPUSD bias is the same as Euro USD and NZD and Odd USD. They all have the same particular bias. They have similar structures, so you're going to have to just watch since we're out of time. We may not go through that as well, but that's something we want to look out for. Expecting a push to the upside slightly. Then if the figures come out positive for the dollar in the NY session, then expect it to go a bit bearish. That's what you want to look out for. So you can see still similar perspective, push the supply level here, fill up this imbalance. If the figures come out positive for the dollar, we expect a push to the downside. In case the figures come out before price gets to supply level, we shall wait for a break below this support, and then a correction and a push lower into these areas. That's basically what I'll be looking out for on all those pairs. So other than that, I would like to thank you guys for tuning in. If you don't have your FXPesa or equity account yet, you can use the link in the description to create one today. And don't forget to take advantage of the FXPesa Caribou bonus. and that's a 100% deposit bonus on your first deposit, and that would help you increase your margin in simple terms as well, and maximize high leverages. Other than that, thank you guys and have an amazing day and a very, very bullish week. Don't forget to manage risks and be very careful with the trades you take, and do your due diligence before you take any trading setups or anything of the sort. So other than that, cheers to everyone. See you next time.